Welcome to the Right Club Podcast, where the focus is on helping you, the real estate investor, advance to the next level. And now let's join this week's hosts and share ways for you to customize your life.
So instead of doing the refinance, you're trying to sell that to be able to recoup over and above what their investment would be.
Still do refinance at year 2 or 3. So it depends how quickly the project moves along. Because at the beginning, the properties, they don't really cash flow too well. And then the interest rate is slightly higher because of the debt coverage ratio, meaning that there is not enough rent to cover everything. So we still refinance about year 2 or 3, and then look at selling the property year 5 and then sometimes 6.
You mentioned that you got tenants out, like you would get a tenant. What was the phrase you used? Tenant transition or something like that? Turnover. Thank you. Oh. And how do you manage that? Because when you purchase a new apartment building, you do have existing tenants, and you can't just say there's the door.
Right.
How do you manage that? What do you do?
So essentially, really, the plan is to take an average apartment building and then turn it into like a pretty amazing community. So in the properties we buy, they're not distressed properties. I would say people are average, and then some of the interiors are they haven't been taken care of, the interiors, but the building is sound. So then we look at different ways. One is there's always natural attrition in the building. So if you have 40 units, maybe 4 to 8 easily will move out in a given year. So you have natural attrition in a building, and it depends on the area and then tenant type, that attrition. And then second one is, unfortunately, some of these tenants live in tougher conditions. That meaning these apartments are not exactly like pristine. So if we offer them units just outside of the city that are a lot nicer for a slight increase in rent, some tenants take that as well. And then the method you've been kind of familiar with, which is cash for keys, which I call check for keys, because it's all got to be 100% legal. That's we leverage that strategy too. So I would say it's a mix of all three. There isn't like one silver bullet, but definitely it is challenging.
Thanks for listening to the Right Club Podcast, where the focus is on helping all levels of real estate investors advance to the next level and help you customize your life. Be sure to tune in next week at rightclub.com/podcast or wherever you listen to podcasts. And if you get a few seconds, please rate the podcast wherever you're listening. It helps the show get noticed by others like you, and we truly appreciate it. And don't forget to subscribe.